Hello everyone. So today's lecture is on Public Provident Fund or PPF. So it is very important instrument of investment in India. So you should listen to this lecture for your exams as well as for your personal investments. It is very important. So what is PPF? It is a scheme of central government that came in 1968. It came on 1st of July 1968 and it is a long-term savings scheme. The account can be opened in banks or post office. Now, what is the eligibility? So, resident individual on his behalf or on behalf of person or minor or a unsound mind person, he can open the account. The account on behalf of minor can be opened either by father or mother, but it can be only one account, not by both. So, either by father or by mother. In case of death of both father and mother, grandparents can open the account as a guardian. PPF account by NRI, Hindu Undivided Family, and POA, person of association or trust, in joint name is not permitted. So, joint account shall not be opened under this scheme. So, there will be no joint account under this scheme. Now, let's talk about monetary limits. Minimum deposit is 500 per year and maximum is 1,50,000 in multiple of 50 rupees. Duration term is 15 years, 50 financial year. It excludes the financial year in which the account was opened. So if you open this year will not be included. After that, 15 years will be included. In case of death of account holder, the nominee / legal heirs can close the account before maturity. In case of death, it can be closed by nominee or legal heir. Extension of account. So after maturity of account, like after 15 years, there are three options. First is account can be closed immediately after 15 years. Second is account can be continued without deposit for any period. So without deposit, it can continue for any period. Customer can extend the tenure up to 5 years. So a block period of 5 years extra he can extend. At a time beyond the maturity by submitting document extension within 1 year from the date. So it should be done within 1 year from the date of maturity. And she has to submit the documents for that. Rate of interest. Rate of interest payable on the investment is declared by the central government from time to time. So central government will decide the interest rate. So they are usually more than FD rates of bank. So how is interest calculated? It is calculated on the base of lowest balance between the close of 5th day and last day of every month. So from 5th day to the last day of month, the amount which is lowest in the account, on that the interest will be calculated. And when it will be credited on end of each year in March. So interest is credited in March. Withdrawal and closure. So one withdrawal per financial year is permitted for account which has not been discontinued. So how account is discontinued we will see in the last. In case of account opened on behalf of minor unsound mind, guardian may apply for the withdrawal for the benefit of them. So guardian can do withdrawal. Now this is important. Withdrawal can be taken from 7th financial year. So if account is opened in 2007-8, so first withdrawal will be in 13-14. Withdrawal cannot exceed 50% of the balance credit at end of 4th preceding year of immediately preceding year, whichever is less. So it can be 4th preceding year or preceding year's 50% amount, whichever is less. Any unpaid loan amount is to be deducted from amount of withdrawal. So if you have taken a loan on that amount on PPF account, then it must be deducted first before withdrawal. Premature closure is allowed after completion of 5 years from the account opening. In the following cases, premature closure on completion of 5 years. We have seen already that here that withdrawal is allowed on 7th financial year, and premature closure is allowed after 5 financial year in these cases. If the amount is required for the treatment of serious ailment or disease of account holder, spouse or dependents. If second point is if amount is required for higher education of account holder, minor or production of documents and fee bill in confirmation or admission from recognized. So second one is for higher education. All changes residency status of account holder. So these were the three ways in which the pre-closure can be done. Note: Provident Fund that provide further that on such premature closure, interest in the account shall be allowed at a rate which shall be lower by 1% than the rate at which interest has been credited in the account from time to time since the date of opening the account. So what this means? So interest given will be less lower by 1%. So whatever be the interest, it will be PPF interest minus 1. In case of extended account for block of 5 years, partial withdrawal allowed up to 60% of the balance of beginning of extension period. So if after 15 years, if we get extension of 5 years, then partial withdrawal will be allowed 60% at the beginning. So whatever be the balance at after 15 years, on that 60% will be allowed for this block of 5 years. A resident who opened an PPF account become a non-resident, the account will be closed immediately. Interest in account can be allowed at rate lower by 1% than the rate at which the interest has been credited in the account. Interest in account shall be allowed at rate lower by 1% than the rate at which interest has been. So, okay, so we have already explained this point. So, interest minus 1 will be given in case of premature withdrawal. Loans and repayment. Loan can be taken from third financial year and can be taken up to sixth financial year because in seventh the withdrawal is allowed. Customer has to apply in loan application form. Amount cannot exceed 25% of the balance at the credit end of second visiting. So amount can be 25% max. Principal. If we have taken loan, then the principal is to be paid in 36 installments, 36 monthly installment. That means 3 years. And the interest is to be paid in no more than 2 installments. Now, this is important. Account holders shall pay interest thereon in not more than 2 monthly installments at the rate 1% per annum of principal for the period commencing for first day of the month following the month in which the loan is drawn up to last day of the month in which the monthly installment of loan is repaid. So, if the loan is not paid or repaid only in part within, so if it is not repaid in 36 months, then the interest on such loan shall be charged 6% per annum instead of 1% per annum. So now interest will increase if not paid in 36 months. No loan is permitted when earlier loan is outstanding or customer is eligible for withdrawal. So if there is already a loan, no other loan will be permitted on. Subsequent loan cannot be taken in same financial year even if the first one is paid. Even if you have paid the first one, you cannot take another loan. Nomination is available in the name of one or more person. Shares of the nominee can be defined by customer. If minor is a nominee, then the customer should also appoint somebody to receive and hold the PPF fund until he gets mature. No nomination is permitted in case of minor's account. So, nominee cannot continue the account after the death of customer. In case of minor account, no nominee. Now, transfer of account. The account can be transferred to and from bank, branches or post office. So, transfer is allowed. Now, this is the important part, it is tax benefit. Subscription during the financial year qualify for rebate under 80C of income tax. So, you should remember this 80C of income tax. Now, interest accrued in PPF account and withdrawals therefore are fully exempt under section 10 subsection 11 of income tax act. So remember this also. Investment under the scheme is fully exempt from wealth tax. So there will be no wealth tax. Discontinued accounts. What are discontinued accounts? Accounts in which the minimum subscription of 500 is not made during financial year. So the minimum subscription was 500 and maximum was 1,50,000. So if we have not deposited 500 per year, then it is called default. Now it can be allowed by depositing 500 plus 50 or default fee. So if we deposit this, then account will be continued again. The account holder of discontinued account shall not be eligible to open new account before closure of such discontinued. So if you already have account, then you are not eligible to open another account. Facility of loan and partial withdrawal shall not be allowed in such accounts and to be allowed only for regular accounts. So loan can be given in regular accounts and it cannot be given in discontinued account. Passbook will be issued to every subscriber. So every subscriber who has visited the branch will get a passbook. So that was it. It was very important. So just read it, revise it again and again to remember the point. It is important for bank exams and general knowledge too. Thank you very much.